Ring, ring, ring. Hello, marshmallows.
Nice.
And peasants.
No.
And welcome back to Krown's magical but also extremely serious magic internet money cave.
Welcome back to the Krown Crypto channel. Wishing you a happy healthy start to this Monday morning over here. It's a new week. We got all sorts of new opportunities. And despite the downside, this market's been very, very interesting the last, well, definitely like the last week. Anyways, with that in mind, I wanted to follow up on the short-term timeframes and the higher-term timeframes today. Fit the puzzle piece together as there are a few new things to be aware of in the very short term. And other than that, I think it's time for me to get right in deep and down and dirty into this analysis. So let's start it off here with the short-term timeframes. Anyways, Bitcoin on the short-term timeframes, we actually did get that closure below 16,200 or so. However, Bitcoin, or no, CZ has come out and said that he's going to raise a fund, which is going to, well, I guess, save the market. And hey, that is obviously good news. Probably good for the long term, I suspect. I mean, again, I'm not an expert in that, in that vicinity, but whenever you do see sort of a pump based off of news like that in a general heavy trend, in this case, the trend is the opposite direction of where that news would kind of be going. Typically, these are going to be trap moves. And I do believe that we have a bit of a trap situation going on in our hands as of right now. So let's talk about what would actually confirm that trap and then what to be looking for if that doesn't get confirmed. So first and foremost, I do want to highlight that 4-hour BBWP. We did already witness the corrective moves. That was that big bounce, about 17 to 20%, all the way from about 15 to almost 18,000, or actually above 18,000 bucks. And now we can see that BBWP, representing volatility on the 4-hour time frame, is starting to expand yet again. Now, with that said, the reason why I do say that this is a potential trap is because Bitcoin does have potential hidden bearish divergence on the 4-hour time frame. So it will be confirmed only if Bitcoin confirms a local high. And how would you confirm a local high on the 4-hour time frame as of right now? Well, if we do get a 4-hour closure back down below about 16,400 or so, give or take about 50 bucks from that number, well, that would do it for me, thus confirming higher highs on 4-hour RSI alongside lower highs on price action, alongside expanding BBWP, meaning that volatility plus trend plus momentum probably going to continue on to the downside. With that said, we should also go cross-reference short-term time frames, stochastic momentum, and see where the pivots are. For right now, the 12-hour time frame is pivoted at 15,350. This is for CME, by the way, and there is a big differential between CME and spot price action, about $400 to $500 discount on CME versus spot price action, which is really, really significant. Again, another one of those pieces of information that says that, to me at least, we're at extremes. And while I do think Bitcoin could very easily have another leg down here, which could bring things significantly lower, I do think that we're probably closer in terms of a low time-wise than not. On top of that, it should be known that 12-hour volatility of stochastic momentum is at extremes here, looking for this one to go into a contraction phase. 6-hour time frame is going to be showing the same sort of volatility reads, by the way, and also going to be pivoted at about 16,000 bucks. Again, keep in mind, there's a big discount on CME. It is currently trading 16,180 versus spot price action, which is about 16,700 or so, or 650, somewhere around there. But that is a pivot as of right now. 4-hour time frame is going to be actually down as long as Bitcoin is below 16,420. Great number right there, which currently, again, it is below about, I don't know, a little over 200 bucks. And then the hourly is actually going to be up, I believe. Yes, indeed it is, as long as Bitcoin's above 15,400. So what does that align with? Well, it aligns with likely pre-market. When I say pre-market, I mean before US Open, sideways, and maybe Bitcoin does try to extend the rally a little bit more. But keep in mind that line in the sand, 16,400, that's when the news becomes a nice little bear trap before likely getting ready for new lows on this move. And we can talk about downside targets after that, but for right now, kind of have to respect the news, I suspect. But ultimately, whenever I see something like this, or generally in the past, a lot of the time it's going to be a trap. But in the interim, can Bitcoin rally up? Sure. I mean, definitely possible, I guess. I mean, anything's possible, right? But it's the same thing as before. And I want to speak very clearly now about where things actually do change around, not in favor of the bear laws, but in favor of the bull laws. Not calling a new fucking bull market or anything like that. That's very, 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 very far away. Not a topic of conversation right now. But it would essentially say that, hey, the downside is over and it's time to be looking for some more sideways accumulation. And that would be with one of two things. Either one, a weekly close closure above 18,000 bucks or so, the 382 right here, a little bit above there to be fair, and then 2, a daily closure above the 0.5 at about 18.5 or so as well. If we see one of those two things, then yes, I would start to say, hey, this is going to be one major massive bear trap. Expect some more sideways, and Bitcoin probably tries for another rally into the $20,000 region into end of year. Do I think that's very likely to happen? No, I don't. I'll explain why in a bit, but that would be the criteria that I need to see in order for me to be in alignment with that. Until then, on the short-term timeframes between now and probably around US market open, Bitcoin can extend the rally if it wants, but again, keep your eyes on 16,400 4-hour timeframe closing basis, not on CME, but on spot. Anything else is just irrelevant, really, as far as I'm concerned, as far as like actual trend and in continuation or reversal matters. So with that said, I wanted to now reference the higher term timeframes and speak about what got confirmed in the last 24 hours since we had the weekly closure for spot, of which weekly timeframe we did confirm, or not we, but Bitcoin confirmed hidden bearish evidence on the weekly time frame. Not good right there. Obviously, that was a bit of a formality, seeing as CME already closed and confirmed it on last Friday. And this coupled with one of the lowest volatility reads on the weekly time frame does imply that we're probably looking at a pretty big move, which has still yet to really come to fruition here. I do think that once this gets going, we're probably going to see things move for a week to maybe 3 weeks at most, and that's probably going to be a very, very intense move. Probably already, have started to see this, to be fair. It is pointed up right here. But ultimately, to put this in perspective, we really haven't seen that many periods over Bitcoin's full history, the full 12, 13-year history, with this low levels of volatility. And to put it into perspective, we are literally below 10 percentile right now. So these are extreme lows on the weekly time frame. Very likely looking at a big move. So with weekly hidden bearish evidence confirmed, and also that sort of a setup alongside the weekly stochastic momentum, which is also going to be pointed down as long as Bitcoin's below 16,450. This is on CME. On spot price action, the pivot is 16,900 or so. So both of them are actually below right now. Well, pressure remains to the downside. And if we go and reference this chart over here, the 2-day time frame, the 2-day CME volatility versus stochastic momentum signatures, well, this can give us some areas of interest upon continuation to the downside, assuming that reversal conditions are not met. So where would it essentially be? Well, we need to go over the signal first. The signal is this: the volatility of stochastic momentum, represented by this indicator right here that my cursor is currently on, getting to extreme lows, which are defined as anything below this green horizontal bar. The expansion phase from these extreme lows for the full history of CME, of which there were 10 prior iterations, now 11, this is the 11th, has led to an average move of 39.5%, done over the course of about 3.5 weeks, and the stochastic oscillator has now hit 9 out of those 11 directions, so it has increased its hit rate about 83%, I believe it is. Now, first standard deviation alongside the average move would give us a range of interest between about 32% all the way up to almost 47%. I need to take a sip of this water desperately. I apologize, but like I really need it. It's so damn hot here, just so you know. It's good. It's real good. I'm sorry. So again, we saw this signal confirmed. This was very early November, and that has already played out, a good portion. We've already seen about a 30 to 32% move off the highs. If I actually did this perfectly, it'd probably be more around 32%, which is interesting. Yeah, 32% puts Bitcoin just below 15,000 bucks. And yes, so we have hit the bottom end of the first standard deviation already. So after that target was hit, that's when we were saying, hey, likely to have a bounce here, maybe reversal, maybe reversal. Of course, the criteria for reversal confirmation we already went over. Need to see a daily above 18.5 or a weekly above 18. One of those two conditions would work for me. And until then, pressure remains to the downside after a corrective bounce, which I think that we probably played out mostly already. So what's the next area of interest? Well, that would be the average, which is about 39.5%. So let's measure that one out and see where that would theoretically put Bitcoin at 39%, puts Bitcoin at basically 13,200. So let's just say anywhere between 13 to 13.5 or so. And then the upper end of the first standard deviation, which, by the way, this would not be my next target. This would only be a target if the average move is taken out, but that would be 47% about, and that would put Bitcoin at about low 11s, low $11,000 regions. Again, these are on closing bases. Now, what is also interesting about this particular setup right here is that the average days taken is about 24, 25 days, so just over 3 weeks. To put this into perspective, we've seen this signal already play for about, oh geez, it's kind of hard to do right now, 10 to 12, 10 days. I think we're on day number 10 right now. Something like that. So we've already seen a good portion of the average days already play out, but seeing as there's theoretically still, it's reasonable to expect that this one probably goes on for longer, another 14 days, which is like 2 weeks. Well, risk does remain to the downside with those potential targets in mind. Again, we want to see failure from one to the next one in order for that, to be relevant, of course. And it all starts with the short-term timeframes confirming that hidden bearish divergence upon a local high confirmation, which I suspect if it's going to happen, it's probably not going to happen until U.S. market opens. So keep an eye on that 16,400-ish region below there. That's when I start to look for that next sort of tumble throughout the rest of the week to those new lows, perhaps as low as 13.5 to 13 even. Short term, like very, very short term, we actually saw a lot of momentum oscillators kind of, in conflict with each other. So probably a bit of sideways, maybe even tries for another rally. But again, any rally that fails to get back above those two pivots that we gave out earlier, I just look at that as another failed rally. So fair enough. Anyways, I think that's a good place for me to leave it off on this particular video. I want to once again give a little bit of a warning to exchanges out there. Obviously, everyone, or I imagine most people, know about what happened with FTX, which was, it's just a massive surprise, obviously. To me, FTX was like the most legitimate one, or at least I thought it was the most legitimate one because they were regulated in the US, but that appears not to be so. So with that in mind, I do think that it's wise to do a couple things, or at least I can tell you what I'm doing. So one, do not keep any more on an exchange than you're comfortable with losing, just as a pure precaution. Two, if you are going to keep them on an exchange, understand that that's what leverage is for. Leverage allows you to trade with more than what you actually have on the exchange, and you can use that to protect your equity, which you should keep, or in my opinion, you should keep off the exchange. At least that's what I would be doing. That's just a nice little protective thing, and a ledger is, I think, probably one of the best things for that. Ledger, Trezor, whatever the hell, these hardware wallets, basically, those are going to be probably the most, or among the most safe, if you can say that anything's like safe, right? And then three, a lot of exchanges now are trying to do this this proof of funds called Merkle tree analysis. The reason why this is important is because Merkle tree analysis will essentially not just have a proof of reserves, proof of funds, but it also shows you the exchange's liabilities on the blockchain. Because your proof of funds means absolutely fucking nothing. And I'm not an accountant, by the way, but at least I know this. I did take one accounting class in college, didn't work for shit, but I've studied it quite a fair bit after college, and nothing, proof of reserves mean absolutely fucking nothing without the liabilities of an exchange. You could have reserves of $1 billion, but if you have liabilities of 10 billion, like fucking FTX, you're fucked. So fair enough. Anyways, the reason why I bring this one up is because I suspect that a lot of exchanges are trying to implement this. These things take time because it has to be audited, and it has to be like, it's like a serious thing. I think that Binance is doing it. I know that Bybit is doing it. They've reached out to me to let me know because I was like very, very questionative of that. And so I just wanted to get that out there. Like, look for that. That's probably going to be the best signal that an exchange is legitimate, if there's going to be a signal at all. Of course, like I said, Bybit is working on doing that. I do know that, or at least that's what I'm told. Again, I can only say what I'm told, obviously. But as far as Bybit goes, I should let you know about the promotion. Again, understanding that if you have any sort of an issue with this, don't fucking do it. Just don't fucking do it. If you are completely risk averse, don't fucking do it. It's not worth it. Just wait until there's proof. But Bybit's current promotion is like $30,000 deposit bonus. That is obviously if you deposit a shit ton of money and also trade a shit ton. But yeah, they will actually, have a rather large bonus. They just want to snipe everyone who got wrecked from FTX and get them onto the exchange. Fair enough, fair play, right? And then also they do have 0% fees on maker orders for both spot and derivative contracts, which is also rather attractive, especially for derivatives, because usually that costs quite a pretty penny. Anyways, that is available with the link in the description below. Again, do not fucking use these things if you are risk averse in any way, shape, or form, because, well, it's just not wise. Other than that, it's a good place for me to be leaving off. Much love, take care, and see you hopefully soon.